Hello, friends. This is Deepak, and welcome to today's podcast. So, I'm recording this video in response to some of the questions that came from our last meeting, where we were discussing how California has now raised the payroll tax to 14.4%, and they have done similar other moves in the past as well. So, what does that mean? And I talked about deferred compensation as well as how a lot of high earners, W-2 earners, are using that to reduce their taxable income. And in response to that, there was some confusion. So I thought it would make more sense to clarify some of these things. Now, anytime you hear something on YouTube, or even at a live event, they're really generalized comments. They are not really designed to answer your particular tax situation. So please don't take this seriously and try to act on it without setting up a consultation. And only after that, you should decide what to do. So let's talk about this. So what's happening right now is if you go on Google and you just type in how much revenue California is losing because a lot of high W-2 wage earners are moving out of state, you'll be surprised, you know. And, California's tax reputation is obviously the reason for that. That's why people are moving. High profile folks, even celebrities, are making headlines about fleeing the state or at least using a deferred compensation. Just Google it. I'm not going to name anybody in the video here. So I'm going to try to break it down as to some of the most common myths, some of the common mistakes people do, because oftentimes they come back to us after they have already taken an action, after they have already decided to do something. So as you guys know, I work with Sanjeev Gupta CPA. We've been working together for almost 20 years, and we have 3 offices in California. One is in Fremont, one is in Pleasanton, one is in Sunnyvale. And now I'm expanding here in Texas, where trying to get an office in Austin, in Dallas, and Houston. And I run a nationwide tax practice, so people from all over the country, reach out to us to help with taxes. So, and then obviously a lot of people from California move out of different states as well. So I think it's relevant to a lot of people. So California boasts the nation's highest individual income tax rate. And as I'm recording this video today, it's January 11th, that number is 14.4%. Can you imagine 14.4%? And in Texas, that state tax is 0, so 14.4. And if you're a W-2 earner, you also pay FICA, which is roughly about 15%. You pay 7.5% and your employer pays 7.5%. So on average, if you think about it, before you even hit the federal taxes or capital gains or alternative minimum tax or net investment tax or sales tax or the tax that you're paying on your cars or your gasoline tax, you're already paying 30% to begin with. It's, what are you going to make and what you're going to invest and how you're going to get a return out of it, right? So serious business. That's why I always recommend that when it comes to taxes, do some tax planning. No matter how much you're making, whether you're making $100,000 or you're making $100 million, everybody can use some tax planning. You have to think about this subject matter seriously because it's taking a big chunk. Imagine if I told you an investment that can make 30% a year. Would you be interested in that investment? I'm sure you would be, right? That's a great investment. And here we are paying almost 30% just in our FICA and state taxes. And I'm not even talking about all the other taxes. So if we can figure out a way to save some of this, I think that's a good start. That's a great way to build wealth. So out of 40 million people who live in California, only around 95,000 are millionaires. Maybe that number is a little bit more. I think my stats are a little bit old, with the Tesla going public and some of the other companies has made big changes in last few years in terms of wealth. So maybe that number is a little bit old, but still, just for comparison purpose. So you got 40 million people in California. Out of that, 95,000 are millionaires, and they shoulder a significant share of the tax burden, almost half. That means 50% of California revenue approximately comes from these high wage earners. If they start moving out of California, what does that do to California's economy? What does that do to all the social services, to the healthcare, to the police, to the firefighters, and so forth? And I think you're already feeling that, right? I mean, in California, oftentimes people reach out and like, "Oh my God, my car got broken into. The car got stolen. There was a robbery. Somebody just showed up at the door and did this or that," and all kind of issues I've been hearing lately. So I think if you're watching this video in California, you can relate to that. And a lot of that has to do with budget. I mean, if your city have budget, why wouldn't they improve the police presence to eliminate some of these bad apples from your society? So that's one side of the story. The other side of the story is that everyone is thinking about how can they avoid California taxes. What can they do to get rid of that? So let's break that down. So see, these high income earners often have ties to some sort of business in California. Maybe they have a lot of real estate, maybe they have properties, maybe they have a small business there, or maybe a branch of business there. And that makes it very, very difficult. And that brings me another important point. So a lot of time people will say, well, I live in Texas and there's no state tax there, and I own a property in California. Why do I have to pay property tax? Well, you're earning an income there. Here's another, I guess this might be a little bit easier to understand. Let's just say you live in Texas and you set up a business, let's say in India, or Mexico. So shouldn't Mexico or India get tax revenue from that business? You're generating income there, right? They are the one providing all the resources. They're providing an infrastructure for you to be able to generate income from there. So yes, they deserve tax revenue out of it. So same rule applies here. So if you have some sort of business, you have some sort of real estate in a state that charges state tax, you got to pay the state tax. There's no way to get around that. So just be careful when somebody tells you, oh, just set up an entity here, set up an entity there, do it this way, that way. Before making those moves, please seek out a consultation to make sure you're not missing something important. Okay? So now, if you're a simple W-2 employee without any California ties, so let's say, you are a W-2 employee for a company and you live in Texas, for example, you can probably get away with that because, you don't have a house there, your kids don't go to school there, you don't have a bank account there, you don't have a gym there, maybe you occasionally travel there, but that's minimal. So if you're a W-2 employee, maybe you can get away with it, you know. And California, by the way, on the other hand, is always looking for ways to make revenue any way they can. So, but still, you still have a chance. But if you have a real estate, you have some sort of business, you have some sort of ties to California, like some way you're generating income out of there, then it becomes difficult. So why I'm telling you that? So before, if you were a business owner or a real estate owner, you get it. You understood this. But now with remote workers being all over the place, and I'm just picking Texas as an example. We have clients who are in Nevada, which is another good state, Wyoming, Delaware. People are the people are moving all over the place. I know so many people who moved to North Carolina, who moved to Chicago. Doesn't really matter what you're moving. So if you're considering a move, if you're thinking about, hey, I'm just going to move to reduce my taxes, I want you to stop there for a second. You should not be really making any move based on just taxes. Taxes are an important part, but they're not the only part. There are a lot of pictures, your healthcare, your chances of success in a business or a job, what kind of availability of your talent is in a particular area. How is real estate doing in that particular area? What is law and order in an area? What kind of appreciation is in that area? What kind of connections, what kind of groups, what kind of infrastructure, what kind of people? I mean, I can go on. That can be a video on its own. So don't make your decision just based on reduced taxes. So that would be absolutely no. So don't do that. So if you're just a regular W-2 employee earning high income, let's say maybe 300K or more. I don't even know if that's really even a high income in California anymore. Maybe it's 500K now. You are probably thinking about how can you save on California taxes because they're huge. So what do you need to do? Well, so California is known for its vigorous, and I'm saying like really vigorous pursuit of tax revenue. If you are a resident, they want their share, no matter where you earn your income. They tax worldwide income for residents. So if you live in state of California and you do business in Mexico, guess what? You got to pay the Mexico tax, and you get to pay the taxes in California, in the United States, and in California. Now there are some treaties that get you some tax credit, but just try to understand the principle here. That you do end up paying those taxes. So what you need to do, what can you do? Well, it's going to boil down to your residency. So if you are a resident of California, very difficult. So can you switch your residency? Can you move out? Right? So when we say move out, yes, but you actually physically have to move out of state and move your complete residence to a different state. So let's just say if you're thinking about moving from California to maybe Las Vegas because it's so close to California, just move, you know, pack your bags, move. Go in Las Vegas or wherever you're planning on moving. Buy a house, buy a property, just take a homestead on it. So if you have a property in California, remove the homestead from there and move that homestead to that particular state that you're moving into. Enroll your kids in those schools. Go to your gym in that new state. Have a bank account in the new state. You got to set up all the new ties with whichever state you're moving in, and you got rid of your old ties with the state of California. So California uses a word domicile, and I guess not really California. Many other states uses it as well. So domicile is to figure out where you intend to return. So understand that intend to. What are your intentions? So if you leave for a few years and then come back to California, California might still consider you a resident. You see that? So give you another example. Let's say you move out of California and you move to Texas. A lot of people are doing that these days, especially during pandemic. Now you go on Facebook and you say, look, I'm going to try out Texas for a couple of months or a couple of years. Then I'll probably come back to California. Guess what? You're still a domicile in California. That means California can still go after you for all the California taxes you did not pay because you thought you were a resident of Texas. So just be very careful with that. So the domicile is all about your intent. So California taxes all income earned within their borders. So it doesn't matter where you are, when you earn it, you know. Um, but the one advantage you do have, I guess, if you live in a state, let's just say California has 14.4% tax, maybe you live in a state that has 2.5% tax. So you will get credit for whatever tax that you pay to California. But because California is the highest taxes, so chances are you're not going to get all of that money back. You get some of it as a credit. Okay. And like I said, if you do decide to do that, make sure you your intentions are clear. Don't put out a post. Don't go out there, tell your friends that, oh yeah, we'll probably go back to California. All of that stuff can get you in trouble. If you're concerned about these kind of legal matters, by the way, I suggest that you speak with an attorney. This is just a general guidance. They are expert in those kind of laws, and they can clarify some of this stuff for you. But I'm just giving you some general overview of the way I understood things. So it's just my opinion. Okay. As I said, if you do decide to go there, it's like, here's another good one. Sometimes client will say, well, you know what, I'm gonna move to Texas, but my kids, my spouse, they're gonna live in California, and I'm just gonna drive back every weekend or every couple weekends. Doesn't work. California is watching out for you. So you cannot just go walk out and leave your kids and family in California to avoid those taxes. That's not going to work, because they are going to go after you because you do have family ties there. So definitely don't make that mistake. Okay. Like I said, your bank account, your voter registration, your driving license, your car's registration, all of that really needs to move. Now, what if you have a business in California generating income? So that's where it's get a little bit tricky. The type of entity matters in this case. For pass-through entities like S corporations and partnerships, the income flows to you, and it's considered California source income. However, you might be able to avoid taxes on wages earned in another state, as wages are typically taxed in a state where you perform the work. So there's a little get away with there. So your goal is to completely eliminate ties with California and establish a new residency elsewhere. Your domicile should point to your new state. So there should be no confusion about where your business is. Now, um, and why do I say that? So let's say if you have a business, maybe you have a retail store or something like that in California, that business will get taxed in California, even though if you're living in a different state. So be careful with that. So for big financial events like a lucrative deal or income changing residency in same year, you know, that that can be a potential flag. So let's just say all of a sudden you have big income this year. Maybe you got some bonus, or maybe you sold something, and let's say your normal income is 100,000. This year it's $500,000. You're making a lot of money, and the same year you decide to change your domicile. That can invite an audit. So be careful. So timing is also important. So when you go to a good tax professional, they're not they're asking you a lot of questions, and it might take time, and they're paid consultations, so they're not free, but they're asking to kind of advise you based on where they think the risk is. So don't underestimate, like, oh, I got a 30-minute consultation and this person spent 15 minutes asking me questions. There's a reason why they're asking questions. They want to avoid any kind of misjudgment on their part and give you the best advice they possibly can, which they can't do if they don't ask you the questions. So my suggestion to you would be accurate in reporting your income. Keep all records. If you have, significant transaction, like a big transaction, maybe you can postpone it. Do your residency change first and then do that transaction. And there should be sufficient time in between. So don't do that right away. So, for example, we remember a couple of years ago, I think it was during COVID, or maybe right before the uh, COVID hit. So Elon Musk, like Tesla is a huge story. People are still talking about that. So Musk relocated his residence, his corporate headquarters. Tesla factory is in Fremont, but now in Texas they have SpaceX, they have Boring Company, they have Tesla factory now. That's where they're building Cybertrucks right now. Beautiful factory, really, really huge. I've been there. It's nice. Now, this means he is the resident of Texas for the most part, but he's still doing business in California as well. He still have a factory there. He still have Elon Musk. He did only because of taxes. Not really true, you know. I mean, I haven't looked at his tax return, but I don't think he's able to avoid California taxes because he still has significant ties in California. He might be doing something with shifting some of his income here and there, but definitely not. He's not trying to avoid all the California taxes. So please try to understand that. He still have plenty of business in California. So, and because of that, it's very difficult for him to avoid California personal income taxes. So he's likely to have some presence in the state. It's not like he never comes to California anymore. Of course he does. So I don't think he can avoid those taxes, because when he goes there, he's earning, he's a big business there. So I don't think California will let him get away with that. Now, yes, granted, he has sold all his properties. His potential ownership in some of his investments is probably gone. The rental properties are gone, but still, I think he still have significant ties there. Now, big people, and when I say big people, meaning really, really rich people. Everybody's big, but really, really rich people, someone like Elon Musk. One of the things that's interesting about them is the equity, because when they're setting up the company, they have a huge equity share in a company, and that adds complexity. If most of his income is from equity or stock, vested interest in incentive stock options may still be attributed to California, you know. So, because obviously, when did he get those stocks? He got the stocks when he was in California. Sure, he's not in California anymore, but still, he got those stocks then, and then California can go after that as well. So, this involves you know, like how long he has holded the stocks, what has he done, where is he resident, what is his domicile. So all that stuff matter. I think someone at that level, he probably had a lot of tax attorneys trying to work that out for him. So for those with incentive stock options, the timing and strategy is crucial if you're planning on moving. So don't just pack your bags and leave. Please set up a consultation and discuss. And I say that because a lot of clients in California do have those stock options. So be careful. Changing residency isn't as simple as spending time elsewhere. You know, California looks at various factors, including size of your residence. You know, for example, if you're living in 4 bedroom in California and now you just move to 1 bedroom in Texas, they might bother them. You know, the state employs aggressive tactics. I tell you that one, and comprehensive evaluation to prevent tax evasion. So California is very serious about this stuff. As you guys already know, California, is one of the highest tax state. 14.4% as we speak right now, and there are some other um, pro- uh, proposals where they're thinking about, for example, I talked about recently is deferred compensation. So a lot of time, what happens is California residents, they try to defer their compensation and hoping that they will move out of state and then um, take that money. And there are some regulations around that as well. That's a whole different topic. But still you can do it. At least right now you can do it, and California is trying to stop that. They don't have authority, at least not yet, but they're trying to stop that as we speak. So that's one of them, and there's some other regulations as well that they're trying to raise tax as well. How far can they go with that? Who knows? But obviously they want to make money because they think they provide the best opportunity for everyone. So those are my thoughts if you're thinking about moving out of state. And like I said, this is general concepts, but probably be best idea to talk to us in person. If you're in California, you can go to our office in Fremont, Pleasanton, Sunnyvale. You guys all know my associate Sanjeev Gupta CPA manages that, so you can go meet with him in person. We have a big staff, almost 25, 30 people there. They can help you out and take care of whatever it is that you need. If you're anywhere else, just go to Tax Code Advisors, set up a meeting with me. Let's get on a phone call. First 15 minutes is free. I get to know about you, talk to you, and see if I can help you out. And after that, it's paid consultation. And in addition to that, I try to deliver a lot of value, right? I have financial market outlook meetings that I do every 2 weeks. So you're welcome to join those meetings where we talk about how we see economies doing. We try to filter all the news out there, try to make sense out of what's happening out there. Just give you another set of eyes looking at the stuff. Uh, if you are a small business owner, we do small business advisory group. In that advisory group, we talk about how do you grow your business? How do you improve your sales? How do you improve your marketing? How do you improve your operations? How do you become a better businessman? If you're looking for opportunities, a lot of people bring opportunities to us. We are happy to present those to you. If you're looking for partners, you want to grow your business, need some help with that, reach out to us. So you can always set up consultation appointments with me in any of those sources. You want to just consult about, hey, how do I grow? How do I get more partners? I have this investment opportunity. Maybe I'm looking for partners in this business. We can see if we can help you out and try to connect you with some people who might be able to help you out with that. So we are very resourceful and we are very, very helpful. We're always open. Just go to Tax Code Advisors and you can reach out to me via WhatsApp from there, or you can set up a 15-minute discovery call with me. Uh, so I think I'm just hitting my 30 minutes mark, and I don't like to keep things anything more than 30 minutes. I'm going to stop it here, and I'll look forward to seeing you guys at one of those meetings. Okay, thank you.